Okay, I wanted to shoot a quick little video just showing you the loan process. So let's begin. Let's say that you've already established your vault and you want to use it for your business. It could be to buy a car, piece of equipment, to cover payroll, doesn't matter. Remember, you are the bank, so you determine how and when you use it. The first thing we're going to recommend you do if you use this for business is open up what we call a wealth flow through account. This is just simply a personal bank account. If you're married, then it should be in both of your names. We encourage you to open it up at the same bank account as your business. That way it makes it a lot easier to transfer funds. The reason why we do this is we want to keep our banking functions separate. If we commingle in our business or personal account, things can get lost and spent. In addition, if we're using this for a business purpose, the interest we pay the insurance company is tax deductible. So we want to be able to cleanly document what that deduction is going to be. Now, when we open up this account and we borrow from, are we borrowing from your vault, or are we borrowing from the insurance company? Remember, insurance company is just using your cash value as collateral. You're borrowing from the investment arm of the insurance company. And what we're going to do is we're going to get that loan direct deposited into your account. Now, I'm going to go through this process, and believe me, we're going to make this as simple as possible. We are here to help. The first time, there is a learning curve, but once we set all this automatic stuff up, we should be able to just set it and forget it. Now, once it's in the wealth flow through account, we transfer it to the business. Now, the business is going to have a loan on the books. Like any other loan, we will pay it back typically in monthly installments back to the wealth flow through account. Once it's there, we need to pay back to the insurance company. Now, a key thing here is however we want to do it, I recommend that we automate it. If you're going to pay monthly from the business, then let's set up an automatic transfer from the business to your wealth flow through account. And then again, if you can choose how quickly you want to pay it back to the insurance company. I have many clients who just keep it in there for a year, or some may pay the insurance company every month. You're in control, so you can do whatever you do. One thing I found that's worked best is actually setting up a reoccurring monthly payment. You can easily do this through bill pay, and then the advantage of doing this, we can have that transfer automatic, say on the 1st of the month, and we can have the bill pay, say maybe on the 5th of the month. So once you do it, you don't have to worry about it. Now, one of the key things of using this vault strategy and the infinite banking concept is the ability to leverage your policy. And the key thing is that the loan you have to the business and the insurance company is on a simple interest. That means it's on a declining balance. Every payment, the balance and thus the interest paid is less and less. Now over here, since we didn't take the money out of your policy, the money is still growing. It's still compounding. We never broke the compound interest curve. Now, let's take this a step further. Let's say you wanted to buy some real estate. Same thing goes. We can leverage your vault by borrowing from the insurance company to buy the real estate. Now, we could either pay the real estate all in cash, or a lot of times, a lot of my clients will use a combination of bank financing and then the vault strategy for the down payment. However you want to do it, it really doesn't matter, and everything is going to flow the same way. As we buy the real estate, we should be creating passive income. Well, we're going to take that and we're going to pay back the wealth flow through account and thus the insurance company. At a certain point, we will have paid back the entire loan. However, we still have cash flow from that property. Now, here's a key thing. How much money did you put into buying this real estate? Well, remember, we use the insurance company's money, not yours. So technically, you didn't put anything because your money is still in your vault, is still growing and still compounding. Now, this makes it even cooler. Once we pay back the wealth flow through account, we have all the money back, and you have a passive income property. So what should we do next? I say hit the repeat button. Let's do the same thing by property number 2. And with that passive income, we pay back the wealth flow through account. And then we couple it with the passive income from property 1, we can pay back that loan twice as fast. So then what do? We do the same thing. We buy property 3 and we leverage our policy to make the down payment or pay for it. And then we take that passive income to pay back the wealth flow through account. So at the end of the day, you're going to have multiple passive income properties, or maybe this is your business. I use real estate just because it's easy to explain. But the key thing is your money left your account. You never broke the compound interest curve. I hope this was helpful, and believe me, once we set up the first loan, each one gets easier and easier. Remember, we are here to help. We're going to try to make this as simple as possible. Any questions, let me know. And as always, go make it a fantastic day.